Hello and good morning, everyone. Welcome to Almus Market Mornings, your daily dose of global financial updates. It's the much awaited FOMC meeting today. Now, going into the FOMC, one of the highlights is how market participants will perceive statements and data once released. I think more than anything, markets would try to get some insights into the future rate trajectory. Will a hawkish Fed narrative continue, or will market participants perceive some sort of dovishness among this hawkishness? Now, one of the very interesting developments are the yields. US 2-year and 10-year yields are at decadal highs, if I'm not wrong. JK will, of course, cover the implications of this. But a question to you, JK. 75 basis hike is well anticipated by the markets, going by the Fed watch, which is stating an 82% probability for the same. So is the current climb in yields due to the future hike expectations?
Good morning, Swaraj. The market moves are more a function of where they're expecting the terminal rates are going to be now, because as you said, 0.75% is well discounted. There is also, some probability of 1% rate hike because when the terminal rate and the current rate difference is so high, Fed has a lot to catch up, and inflation is not easing at all. Therefore, 1% rate hike will not be a total surprise to the market, although it can create some more volatility in the market. I think Fed is okay with that. They want to slow down the economy, as they have clearly stated many times. And if 1% is done, yeah, you will have volatility, but they will settle down. At least we will have a faster move towards the terminal rate. That is how I am seeing it. Definitely, yield moves yesterday, 2-year at 15-year high, and the 10-year at decadal high, are indicative that market is discounting the terminal rate at 4.5%, not just today's rate hike. Also, plodding the yields higher were two important developments. One is the German PPI inflation, which came at high at a level last seen in 1949. And this was at 70+%, and German Bund yields went as high as 1.95, which was last seen in 2014. 2014, one would remember as the important landmark in ECB history, when they started cutting rates and the euro slid from a high of 1.4 and lost about 30%. So we are back at that level, but euro is at the lows. So what contributes to this difference in the rate, even though we are at the same yield, is the US yields, which were much lower at that time, is now at 20-year high as well. So that's the difference, and the US are definitely commanding a premium, US dollar, because of the safe haven flows, the superior growth differential, and also the challenges that the other economies are facing along with inflation. So inflation with a slowdown, that's the worst case scenario for the other economies. Fed, of course, today's decision, whether it is 0.75 or 1%, will also be giving us a peep into as far forward as 2025 in their projections as to the rate path and the next 2 years inflation and the GDP projections as well. This will be out at 11:30 p.m. IST, and more importantly, market will definitely want to hear Powell's speech, which will be followed 30 minutes later. Markets have already been positioning themselves for a hawkish statement along with their rate hike. So one cannot rule out some profit taking ahead, but the direction of the markets are not changing anyway. Even the equities were lower across Europe and US yesterday. S&P 500 lost 1%, 1.1%, and Nasdaq 1%. Importantly, S&P 500 has closed below 3,900 for a third straight session, and that is considered as a key support on the technical charts. In fact, even the corporate news yesterday, particularly from Ford, which whose shares dropped 12%, was not helping the market as well. And then look at, currencies are actually getting more attention now. And what we are observing is that monetary policies in other countries are of no help in keeping their currencies from weakening further. Stark example was Sweden, who raised rates by 1% versus 0.75, which the market had broadly expected, and that was somewhat intended to curb the weakness in Swedish kron, but actually the currency weakened at 2.5% yesterday. And yesterday we also had Lagarde, who made hawkish comments, and she said that they will raise interest rates to a level that actually restricts economic growth in order to cool the demand and combat unacceptably high inflation. But what we have seen is euro is almost 1% down from the highs of yesterday. Yen, of course, took its cue from new highs in the US yields and has started to move higher. Only reason why it has not gained, rather the dollar yen has not gained much, is because of the BOJ meeting that is scheduled tomorrow. In the background of CPI, which came for third consecutive month higher, and BOJ has been announcing, unscheduled bond buybacks so as to keep the yields lower as well. So very little surprise to expect from BOJ tomorrow. Then we also have a Bank of England tomorrow, and they are in a much bigger fix compared to other economies, because the economy is doing extremely weak, and at the same time inflation is also at multi-decade high. The new government is very keen to bring back the economy on the line, but it looks like it's extremely challenging. So sterling weakness is one of the big headwinds that the government or the central bank is facing. So the currency space is definitely very volatile and interesting. And just to summarize, dollar's strength is not abating anytime soon. Monetary policy of other countries is not really going to help their currencies recover until their economies start to grow, or US inflation peaks out and their rates also peak out. So that's a long way away, as it seems right now. Of course, we had an exception in Canada, whose inflation dropped, compared to previous month, as well as year-on-year basis. That is an exception. But Canada dollar is not getting a help, because again, dollar strength as well as the weakness in oil is keeping it weaker. Some concerns also about some Russia, some of the territories which held by Russia and Ukraine will hold a referendum, confirming the attack on those regions as a attack against Russia. So this type of referendum can actually result in the escalation of the war, or rather the tensions between the two countries. This is not getting much attention, but definitely this is something to look forward to. Indian rupee, a gradual climb to 79, 80, 85, and might see 79, 90 today. As you can see, while we have not broken 80, even the base has been slowly raising, and we are at 79.50 has become a very strong support now. And without fresh flows, which I cannot see in a big way in the face of yields going up everywhere, and also the deficits, which are a challenge for us, I think the vulnerable side for the rupee is on the weaker side, subject to central bank allowing it. Thank you.
Thank you, JK. That was a very extensive coverage, and you were like a very well placed just before the FOMC meeting. As we are seeing, one of the observations I had was the traditional theories which we see in the currency space, especially that rising interest rates should technically strengthen one's currency, but that did not seem to be the case for the Swedish krone. And even hawkish statements by the ECB does not seem to be helping euro. So of course, that's a reminder that this space has so many dimensions to consider um, before taking any sort of market decision. Now, of course, the Fed is very clear with its expectation that inflation is high and it will continue with its rate hike path. Let's see what happens today. Of course, as JK mentioned, it's at 11:30 p.m. IST, the Fed FOMC rate decision, followed by Powell's speech half an hour later. So there can be a lot of turmoil in the markets going into FOMC or even post FOMC. It's important we have a prudent risk management practice in place. If you're looking for someone to manage that risk, we here at Almus Risk Consulting are always available to answer your queries. That's it from us today. Have a very good day. We'll see you all tomorrow. Thank you.